right. Well, hey, we're just after the top of the hour here, so why don't we go on and kick off another town hall? I'm Kyle, or what's the deets again? We have a very specific, at least agenda item for today, and then if we kind of come to at least some community consensus on this call, we can move on to other topics. But I really want to dedicate today's conversation to this specific topic of what to do with our CVX before a deadline of the 30th of March, where we will begin losing out on reoccurring revenue. So why don't we start with me just kind of giving an overview of our CVX position, what's been going on, and then what happened as to why we need to make a decision now. So after spending the end of last year acquiring our CVX, we've landed on a total of about 366,000 CVX, which we blocked at the end of last year, and have been participating in the the gauge weight voting through convex governance. As a part of that, you have Vodium, which is kind of like a token incentive program for people to direct their votes to certain pools in exchange for what they call bribe tokens, or native tokens of the protocols that are looking to incentivize votes for those pools. So we've been participating in the last now 8 rounds of those gauge weight voting sessions, where a group of combination of team and community members speak on at least a bi-weekly basis about upcoming voting that's happened. And we have seen revenue on a bi-weekly basis vary a little bit. As we first started participating, we saw revenue growing on kind of like a per epoch basis that kind of peaked out at around 86 cents a vote. So what I'm going to do right here for people that I'm kind of talking in circles with right now, I'm going to post this resource called llama.air force. And llama.air force is someone from the Curve and Convex community that built a way to analyze this overall kind of bribing situation, and I guess visualize it. So if we look at this round by round chart, we started our first votes, I believe, in either late November, early December, where the dollar per vote locked CVX was worth about 40 cents. We saw that grow up to, at the end of the year, an 87 cents. And then we saw that decline until the 7th, which was the previous voting round from this one, to 36 cents. And this last week, we saw it recover to about 40 cents. So I detail that to say that there's been a little bit of volatility with the revenue, but the revenue has never been, during our participation, under 36 cents a vote. And so at 366,000 votes, that would kind of establish a floor of us earning about $125,000 in these other coins every 2 weeks. So that's kind of at least the gist of what we've been doing regularly in terms of monitoring this position. In addition, myself and a few other folks have had conversations with other protocols that participate in the Curve ecosystem, and specifically in the Vodium bribe convex gauge war, whatever you want to call that. And I would say the interest has been kind of lukewarm of cooperating. And by cooperating, I mean kind of coming to a mutual agreeable position on exchanging our votes for either a lump sum of tokens, or aligning different protocol incentives, or hoping towards an integration. These were all kind of aspirations of what we thought we could do with these votes, in addition to just kind of receiving bribe revenue. And I would say that, we've gotten kind of 2 good conversations around that, but nothing that I would consider is a no doubt, no brainer deal for us. So I wouldn't say that we've kind of sufficiently executed on that portion of what we could do with the Rook. With the CVX votes. So that kind of brings us to where we are today. So about a month ago, at the end of February, Convex announced that they will be needing to redeploy their vote locked contract. And that was due to an issue that surfaced where some people were able to kind of relock but earn double staking rewards through Convex itself. It wasn't like a loss of funds potentially for us or anything, or a security issue for that matter in general. But what it meant was that they needed to redeploy an updated staking contract. And what that did was completely unlock all 366,000 of our CVX tokens, which then need to be withdrawn from the old contract, and then they need to be relocked in a new one for us to continue participating in the same way that we've been participating. And so they gave everybody up until, pretty much, the first week in April. They said that you will have a grace period through the voting epoch that starts on the 31st of March, unless your tokens were scheduled to unlock early, which is the situation we have fallen in, where our tokens were originally scheduled to unlock on the 30th of this month, which means that we needed to decide to relock or not by that day so we don't miss out on further participation. So if you haven't yet, in voice chat, above my first link is the Town Hall Friday Notion document, where we have kind of started to lay out our 3 options of what we can do, which is lock all of our tokens again. We can lock a partial amount of our tokens, or we can choose to not lock any of them. Those are like our 3 immediate kind of options for what we need to do by the 30th of this month. And if you look through the document, the community members added a few pros and cons, but that's what we're going to take some time today to talk about, is the pros and cons of each of these options, and hopefully come to a community consensus about what we need to do before the end of the day, next Tuesday, pretty much. So I'm going to go on ahead and pause and at least open it up for any clarifying questions for anyone that kind of doesn't still fully understand what's going on with the position, and or any other questions people might have, and then we can kind of dive into the discussion around our options. So first, let me just pause here. Does anyone have any questions about what's happened or going on with our CVX? Okay, cool. No questions. Hopefully my rambling made somewhat sense to everybody. So then I'm happy to open this up, and if a community member wants to kind of state their position onto what they think we should do, why don't we kick it off with there and start that conversation? So it looks like Shahar has the first thing to say here.
Yeah, hey guys, hey everyone. Thanks for that kind of overview, Deets, and hopefully everyone kind of read the good Notion document that you guys put together that outlines kind of our options. And I think, like you said, we have good bribe revenue coming in. It's been fairly consistent, around 40 to 50 cents or so on average per CVX every 2 weeks. Partnerships, like you said, has been kind of muted. There's been some interest, but not kind of the right thing yet. I think that's fine. That's something that could easily change in the future, or not. We don't know. I think that the central question here and the central thing to evaluate, as we kind of talked about before, is, are we going to be able to kind of achieve objective 1, which is get a curve rewards gouge? And so I can give a bit of an update. I told you guys I was DDing, some things on curve governance for another project. So I, did some of that, and I can say that, this is at least how it works, right? You need to, setting up a factory pool, like if we want to do Rook ETH or something like that, is permissionless. So we can do that right now. Okay, we wanted to. The thing that has to pass muster in governance is setting up a rewards gouge. And to me, this was really a central selling point of getting the CVX position in the first place. Because to kind of, I'm sure a lot of you know, but with a curve rewards gouge, we can use our voting power to direct curve emissions to our pool, to that gouge, and basically use that as a really good tool to incentivize liquidity. And a reason why it's a good tool is that we're able to use curve emissions rather than our own type of emissions in like a pool 2, right, in order to incentivize that liquidity, and it's more sustainable. It's better for us. We don't have to spend emissions. Kind of better deal, right? Now, in order to get a curve gauge, we need to submit a proposal. That proposal needs to reach 30% quorum to be moved to a vote. Then I believe it's a 7-day voting period, and then we have to hit 51% approval, simple majority, and then the gouge gets set up, and we're good to go. Now, I think that is the central question, right? Can we meet those governance requirements, right? Can we can that proposal end up being victorious? And I think this maybe is something is a topic we should really discuss here, and use the power of the DAO, right? And everyone listening to, we might have people here with connections in the Curve ecosystem, or that have been through this governance process before and might, have some good tips, or that can help us, lobby for votes, which is what it would come down to. I think that, just to finish up, that's kind of the crux of the issue, because if we're not able to do that, then basically our CVX position is just for income. And in that sense, we would, realistically, we'd want to evaluate it against any other type of income coin, right? Of which there are many, many options. So the primary, thing we got to evaluate in my mind is can we use it uniquely for this liquidity incentives? And one more note, I guess, on why I think that's important to have deep liquidity for Rook token, right? When we launch coordination game, and have kind of the new tokenomics around that, we want there to be good liquidity so that, for instance, new keepers can enter, pretty easily, buying up Rook that they need to stake in the coordination game, right? Without, us having to tell them, sorry, you have to take 10% slippage because we don't have deep liquidity, right? And if you want to exit, another 10% slippage. So it makes kind of our whole kind of tokenomics value prop a lot more appealing, if we're able to get this type of deep liquidity. So I'll stop there. I think that's what I wanted to preface.
Hey, thanks for kicking the conversation off. It looks like we had Pi Show hop up here. So Pi, why don't you share your comments?
Yeah, absolutely. Those are all good points. I just want to add to that. And I think it was Miner who brought this up in one of the recent calls. But the other main purpose of incentivizing that curve pool, that Rook liquidity, was sort of operating under the assumption that it would also positively impact Rook price and thereby drive volume to the hiding game. Because at that point we still had emissions for the hiding game. So the higher the Rook price, the more volume we got through the hiding game. Because we no longer have those emissions, that whole point is kind of moot. So we have to decide whether the Rook having deep liquidity for Rook in its own right is valuable enough at this point. And I'll also add to your point about keepers. It is probably unlikely that most of the keepers will be buying and staking very large amounts of Rook to bid in the coordination game, because that sort of opens them up to more of a directional risk. Because the Rook that they bid in the coordination game is based on the USD value of the ARB that they intend to capture. It doesn't really matter what the price of Rook is, and we expect keepers to sort of reload a certain USD amount of Rook periodically, rather than take a huge directional bet on Rook at the beginning, if that makes sense.
Priest, you want to go ahead and share your thoughts here?
Yeah, Paisha, while we currently have you on stage, besides the Olympus Pro bonds, are there any other incentivizations for liquidity that we currently have for the Rook token?
No, there are not. And I think those bonds actually just ended.
Okay, yeah. Because I believe once we actually do have native staking and an APY on staking Rook without any incentivization for liquidity, I would believe liquidity would probably dry up relatively fast, and you can decide for your own sake if that's good or bad. But I believe that at some point we probably would have to incentivize liquidity with some sort of token. And if we don't want to do it with Rook itself, I think Convex is a pretty good alternative to that. So we don't have
pressure. I do think having incentivizing liquidity in some form is valuable. I'm just saying we need to, sort of work out whether CVX is the most capital efficient way to do that, or exploring other options, like maybe opening up another protocol owned liquidity service like we did with the bonds. I'm not sure.
I will also just quickly interject and say that we have liquidity on Bancor as well. So we have, about 6,400 Rook that lives there as well. But yeah, Priest, I interrupted you. So why don't you go on ahead and share your response?
No, that's fine. Yeah, I was wondering what other ways of incentivizing there would be if we don't use our native token and we don't use the Convex bribe / owning Convex angle.
I'm not 100. Oh, go ahead, Paisho.
Yeah, so it's because in a protocol on liquidity sense, as we've seen with the Olympus bonds, it takes a relatively long amount to build any amount of substantial liquidity, and it also is I'm not sure if you would necessarily consider it negative EV, but we do have to sell the bonds at a discount, obviously, to market value, so that we're losing money or Rook in that sense as well. So I just like the idea of having a non-native token that absorbs the selling pressure from our liquidity incentivization instead of having to do it with Rook itself.
Right. We could bypass stuff like the Olympus bonds for protocol owned liquidity and just deposit assets from the treasury directly into whatever liquidity pool we want. We just have to do the math and figure out whether it's more efficient to incentivize liquidity with CVX or just generate some liquidity from the treasury and what the effects are of that. I think it's not super clear to me right now, but
something that I've been thinking about is let's say that we do secure the CVX gauge. Our votes aren't extremely significant in terms of getting a high APY on the curve emissions going towards our pool, which my understanding would be that we would probably need to do what everyone else does, which was pay Rook to bribe people, which then goes right back to us needing to use our treasury assets or emissions to kind of fund the incentivization here.
For sure, yeah. And also just quickly add, on the protocol on liquidity side, I think something to look into would also be Ondo Finance, if you're familiar with that. You can pair your native Rook treasury assets with Fei that they loan out to you at I think a 3 to 4% interest rate, and they then stake that on your behalf in a Uniswap pool. This is something to add to the list of potential alternatives to Convex, but I'm not sure what the efficiency angle of that would be. But that's just another alternative to look into.
Yeah, and then one more other alternative, which I think even Peso just mentioned in voice chat, was Tokamak, where rumors are that they are having another core reactor, epoch or program that's going to be released in the next short amount of time, which, in my understanding, I believe we're a good candidate for. And we've had previous conversations with Tokamak about integrations and other types of collaboration where this has been brought up. So that could be something to explore as well. Pesa, did you have any other thoughts about tokamak or anything? I know that we haven't given you a chance to speak yet.
Oh, it's fine. I just wanted to touch on what Aisha was mentioning about getting a gauge and what impact that would have on Rook price, right? Because in one hand, you can think of it as sort of routing volume through the hiding game, but also you have to consider the fact that when we sort of have CRV emissions for a Rook ETH pool, there's incentive for people to buy Rook, right, to LP and capture some of those emissions. And you've seen that with Badger. I think the day they had their Badger ETH pool on Curve, they went from $12 to $17. So with respect to sort of how sustainable a move like that is, obviously that can be debated, but I think sort of if the APY is like not hella dog shit, people are going to be buying Rook and sort of LPing with it if they can capture some CRV emissions. And then that sort of leeways into my second point of if we do get a gauge, we can actually leverage our treasury to LP ourselves into Curve and capture the lion's share of those CRV emissions and then relock them to sort of, I don't think we would create a flywheel because I don't think we would outpace CRV inflation, but it would certainly enable us to grow our treasury by capturing those CRV emissions that we are sort of incentivizing, right? So that's my sort of 2 points regarding what Paisha was mentioning.
Awesome. Well, thanks for hopping up and sharing. I do want to kind of zoom out a little bit on this where, I think that something that's coming to light is that we don't have that liquidity strategy defined, or even just kind of the research that needs to go into that done yet for us to kind of have a decision be based off of where we're going to put our liquidity in the before this convex vote locking decision needs to happen. Paisha, was there something that you wanted to add to that?
Yeah, I think I didn't do a great job with my first explanation, but yeah, Peso, that's exactly what I was getting at too. Is the original flywheel design for this CVX position was, the positive price impact on Rook from, directing that curve gauge would then drive more volume through the hiding game because of the hiding game emissions. Because, with a fixed amount of Rook emitted per day, higher Rook price would give a higher floor on the volume going through the hiding game that day. Since we no longer have emissions for the hiding game, that flywheel design is no longer valid. So what we have to do is decide whether it's more efficient to just collect bribes from our CVX or to, do some more complicated strategy like you were mentioning, depositing our own liquidity into a CVX pool that we've directed the gauge at with our votes or something like that. I would guess that the more efficient thing to do would just be collect bribes and use some other protocol owned liquidity mechanism.
The comment on that, I think you're right, Paisha, that I remember, the hiding game, what you mentioned, that was part of it. To me, the central part was kind of always just incentivizing liquidity in a sustainable way without using our emissions. But I also might make the point, and I don't know, maybe you disagree with this, but when we launch coordination game, right, there's going to be a APR to Rook stakers in Rook token, right? And so I think you'd get the same kind of positive effect, right, if you have kind of number go up from, better liquidity, which I don't think those things follow exactly, but I think it is obviously conducive. So I think it still maybe is relevant. to where the tokenomics is going, that a higher Rook price is going to have a positive like flywheel effect on it.
And something that I'm not an expert on and I'm happy to be corrected on if I'm incorrect on was, my fear about seeding a ton of liquidity where we're at now, where I would say that we're near the very bottom versus our ETH price, which would be our main kind of token pair. We're also pretty low versus USDC. So us adding a ton of liquidity here seems like we're kind of pegging us to these lower limits, where maybe if we kind of identified a better threshold to add liquidity at, I would think about things like impermanent loss when the token goes up, or I'd think about needing a lot more buy pressure for the price to go up. So those are just some considerations I had, and I could be very wrong on those.
I think I don't think we should look at providing liquidity as a directional bet, really. I think what you say is true about IL risks, but I think at the end of the day, the Rook in our treasury is not Rook we're going to ever sell in the market, right? Probably. We may use it to pay contributors, but that Rook that's sitting in our treasury doesn't have a ton of value. So actually providing liquidity, even at these lower levels, could be a realistic way of increasing our ETH holdings, for instance, right? If Rook price goes up, we'll automatically kind of have more ETH. And that's something we couldn't do, in regular market operations, like for instance, selling Rook on the market from our treasury, right? Not something that's really going to be palatable. So I think I don't quite look at it that way. I think providing liquidity is not really directional, and that there are kind of other benefits around the fact that really the Rook in our treasury is not it needs to be discounted for that reason or something like that. If that makes sense.
Yeah, totally. I think it's a great, what I would say, kind of counterpoint or better way of looking at it. And so, as I said, I'm not really the expert there.
And I got one last thing from what Paisho is saying. I think it is the correct question to ask. What is the most capital efficient way to drive liquidity, right? If that's what we're after. So I think that becomes a central question. And in terms of bribing, I think if we want to do bribing, we still have to have a gouge or a gauge. I don't know how the hell to say that word. We still have to have a gauge if we want to bribe to the gauge, right? So we have to, we have to assess if we can make it through the curve governance process somehow. We have to, we have to either try, or we have to find some way to assess if that will work. I think it'll be definitely a positive to get a gauge set up for a factory pool on Curve. But other potential options, including maybe something like Tokamak, I think should be looked at, and that's a question we have to answer.
So Shahar, you mentioned that you were doing some due diligence around this. Let's say that we do set up that factory pool in anticipation of applying for the Curve gauge. What are the risks associated with that? If you are able to speak to that, and I guess what is a factory pool without a gauge? What does that mean?
Yeah, pool without a gauge just means that you're only earning the trading fees. In the pool, there's no extra incentives. So the Curve incentive, Curve emissions get directed to pools by voting on gauge weight every 2 weeks, right? And that's the whole thing behind convex bribes, is bribing, for those votes specifically. And then, the more votes your gauge gets, right, the more Curve emissions get directed to that gauge for that 2 week period. And so it's incentives, right? So you can have a factory pool without a gauge, and I think you can go look on curve.fi, right? You can see a bunch of factory pools that have no extra rewards, right? And so at that point, it's just LPing on Uniswap, right? Or or LPing on Sushi or whatever, right? So you're just earning the LP fees, but there's no extra incentivization going on.
So do you have any idea of let's call it a minimum level of assets we would need to contribute to this factory pool to stand it up?
Don't specifically. I can try and check on that. I don't think that there necessarily is a minimum. I think the whole thing is permissionless, same as like it would be on Uniswap or SushiSwap, where you can start a pool with like 10 cents of liquidity if you wanted to.
Right.
But what, wouldn't make much sense. And so, I don't think there's really a risk that I can think of, Deets, on like setting it up, like just setting up the factory pool. I think you can think about it very similarly to just, adding liquidity on Uniswap, right? There's not any kind of inherent risk. It's just, I think people aren't like, if people were going to do that, they would be doing it, right? I don't think having the factory pool, suddenly everyone's going to come LP. I think what we're really after is that incentivization.
Awesome. Well, trying to kind of tie this back to the greater conversation here, even in a perfect world, well, let's say even if we got a Curve factory pool stood up, today, tomorrow, and we get on, we try to get that, Curve governance proposal live. I don't think we'll see a response on that before we have to make this decision. So that kind of brings me back to this whole thing of, well, we have kind of 3 doors to choose from here. We have the relock the CVX, we have the not lock the CVX, and we have like lock a partial amount of it. Where I would say that kind of hearing about this now, where there's more due diligence that needs to be done, there's interest in further exploring, liquidity through Curve, and we're not even talking about, kind of directional bets on the investment itself. What it would sound like to me is that we need more time. And this was something I kind of wanted, I tried to make clear yesterday and on Wednesday too, was that kind of regardless of what people want to do with the actual CVX or with the votes or the bribe revenue itself, it seems like we need more time to analyze that and put together a better strategic plan. And those two kind of ideas would mean that we need to buy ourselves more time. And one way to buy ourselves more time is to just lock. We relock, it gives us 4 months of more revenue every 2 weeks. It takes the decision out of our hands to do anything before then. So, we're committed to the next 4 months. So that's option one. The second option would be kind of like to mitigate risk, which would be only locking a certain percentage of it. So we lock a certain percentage of it, which means that we continue the revenue streams coming in. But let's say that we decide that a different liquidity source is better in the meantime, or that, who knows, maybe CVX 10X's again, and we are able to take out our original investment while still participating in the system. And this becomes now like a zero cost investment for us completely, because, we were able to, take out our original investment. Or it's bought us time of slightly slower biweekly revenue, but we just decide to lock it again at a future point, which, we could do at any time after that decision's made. So there's the flexibility there. And then, if the community really was against kind of pushing this topic further, we would choose to not relock it and take a more aggressive stance on figuring out what to do next. Me personally, I'm more in door number 1 and door number 2, where we either relock or we partial lock. But this is where, I think this community needs to come together, because we have to make a call for what to do by Tuesday. And I know that there's bigger topics as a part of this, whether that's our liquidity or our treasury management framework or things like that. And I would just say, kind of like, without having those answers in hand, we just simply need more time. So why don't I go on ahead and pause my little monologue here and let anyone else kind of speak their mind on what we should do before the 29th. Peso, I'm calling you up here.
I'm not a fan of half measures personally. I honestly, if it was two things were to happen, dump it all or relock it all, I'm more inclined to want to relock it all personally. That just gives us time, context to see sort of if sort of, I feel like the amount of time we gave CVX is really not enough. Like we gave it like 3 months and we want to get out, or we're sort of not necessarily we want to get out, but we're questioning if it was a good idea. And I just think we should be on a longer time horizon for any treasury asset, just personally. And relocking for another 4 months gives us that context, right? We can really evaluate if it was a good decision or not based off of the market, right? So that's my 2 cents. I'm in favor of relocking it all for what it's worth, but I'll gladly hear out anyone else's opinion.
Great, thanks, Peso. Lappers, you were next.
Yo, good to see y'all. Yeah, I kind of reiterate what Peso said. It's been a short stint with it. The main thing I wanted to just throw out there is if you do lock, which would be probably what I think is most sensible given the time crunch, and you are able to develop a gauge plan, if it turns out that there is it is beneficial to actually do the gauge, and that can be achieved, through consensus in the CVX world. If you're locked already, you can benefit from that. You don't have to wait to lock till that moment. So if you're locked, you can develop that in asynchronous parallel. And yeah, so it keeps that door open at the same time, I guess is what I'm putting at, if gauge does end up being the path you choose. So
it could be in favor of a full lock.
Yeah, I think so.
Right.
Yeah.
Awesome. Anything else? Looks like you remuted. Aiken, you were up next.
Yeah, I guess I'm just gonna agree with the previous 2 statements. I think having a lock, relocking, and just sort of continuing to see and at least get some benefits while a broader conversation is had on how to kind of deploy the treasury, I think is good. I also want to just bring up the fact that, right, we just need to be clear, at least at a high level, as to what are the goals, right, that treasury assets, right, need to fulfill, right? So there's an opportunity to earn yield on capital. There's an opportunity to diversify assets, right, if that's a goal, right? But it's also, in some contexts, the opportunity to leverage the placement of those assets to either gain political power or build relationships and ecosystems that add value to Rook, right? So if, for example, with a coordination game, it can further certain strategic relationships that then lead to greater product use, then it's kind of a win-win, right? If you can earn a return, deepen relationships, and then get product use on top of that, right? And so a scenario like that where we understand, what are the 4 or 5 things that are possible to gain, it gives at least some sort of an objective way to measure, what's the best strategy. Because even as we're talking now, I was just thinking, right, I think the timeline for Bancor V3 is soon, right? I haven't really followed up in the last few weeks, but with the launch of V3, there's certain things that are beneficial potentially, right? Where we can deploy Rook, get more liquidity, get IL protection from day one. You get auto compounding of the BNT that you gain from volumes. There are all sorts of additional benefits that will accrue with V3 where it might then influence our decision on, how do we spread or divvy up capital or where should it go? So I say all that to say, it feels like relocking for 4 months buys us time to assess all, do a deeper assessment across all the various avenues It buys us more time to kind of see convex through a little bit further. And then we can kind of use that time to really have a plan and say, look, this is what the next 6 months looks like in terms of opportunities to deploy assets. How do we actually have a well thought out plan, right? That is, at least, based on the information we have, just the best allocation of that capital towards, the 4 or 5 end goals that are of the highest priority.
Awesome. Al Cappuccino, we saw you raise your hand. What do you got?
Hey everyone. I just want to say I'm also not a big fan of 50-50 measures. I would highly prefer to lock it for 4 months, especially because I do believe the bull market is still here, and I think it will be for at least 6 months. If we are not already in a bear market, which I don't think we are, I think we'll be able to reiterate in 4 months and decide then if we want to keep the CVX or sell it. I don't know, but locking it completely makes much more sense than only half of it, because in case shit goes, in case we are going to Goblin Town, only having 50% to sell it's not going to make much of a difference. Just my 2 cents.
All right. Do we have anyone else that has an opinion on what to do? Looks like Tommy's coming up.
Yeah, just a silly question maybe. I jumped in later. But shouldn't this go to governance?
So via KIP 5, the management of the tokens is it was delegated to just the coordination of team members in the community. So I don't know if this needs to go to an actual KIP on what to do with these tokens. It was my understanding that we have the full ability to lock or to make a decision on what to do with them without having to do another KIP.
Oh yeah, I seem to recall that actually. Never mind then.
Yep. Just I understand that folks, some folks like to be, all in. For me, I think of, the reason I bring up again the partial one is just about risk management. I know that, Alcap, you're saying if the market tanks and we can only move half, well, that is still, millions of dollars of ours. As the position right now is worth like $8 or $9 million. So, still recovering some of that would be interesting. I also look at when everyone else relocked. And if you want to think about, being the last one left standing during a bear market holding the bag, many people will relock or unlock ahead of us at this point. I know that Tetra and Mochi and a few other DAOs locked right upon their unlocking, last month or early this month. So they do have the jump on us if they were ever going to, make a move ahead of us. And, as I said, a partial lock would allow us in the event of what happened that we saw in late December, early January, where our position over 3x'd and then completely retraced. Well, on a 3x with half of our money, we could pull out our entire initial investment and then have this be zero cost. But then again, that is a strategy that needs to be written up and devised and understood and have community consensus. So I wouldn't say that I'm 100% advocating for, selling if we 3x. I don't think that's a strength of mine to make a decision like that. But I do like us having the ability to do whatever the DAO wants to do in a timely manner, instead of us being restricted to waiting for 16 weeks from now.
Yeah, so if I could chime in. So the question I would ask, right, to that is, which is why I think having kind of, I don't want to beat a dead horse, but having an expressed understanding of what the goals are is important because so two things. One, if you're going in only with half, right, locked in, what does that do for our ability to bargain and to find optimal opportunities to get the most out of the relationship? That's one. And the second question is, right, which is kind of basically the same thing. What's the opportunity cost? Because it feels to me that at this point, when people are relocking, there might be an opportunity to use that as leverage, saying, yes, we want to relock everything, but could we leverage that in this window to bolster certain relationships that we think might get us to better returns? And then going back to the last point, knowing that and knowing what those goals are important, because if part of the goal was, hey, we want to, for example, lock some of these tokens, but if there's an opportunity to take off our initial capital, we'll do that. Then if that was an expressed goal at the beginning, when we 3x'd, that might have been something that would have brought to the table and said, hey, here's an opportunity to move a third, recover our capital, we'll ride the rest, right? And it's almost kind of like, risk-free at that point in terms of the financial outlay, right? So for me, it feels like it's one thing to kind of propose, various measures, but it also has to be grounded in how does that fulfill the express goals of the strategy, and then what's the opportunity cost, right? What are the alternatives if we're not going in that direction? Right? Because for me, there has to be a better alternative, and if there is, then sure, right? Maybe pull some, right? There are other ways we can use that capital, but save for that, I'd lean on just seeing a strategy through, and then spending those 4 months, perhaps, tightening up on the treasury strategy and having a much more explicit set of goals that we can manage or actively manage against. And also it helps with reporting to the community as well, because, right, so part of the idea of KIP5 and having some ability to manage and make decisions is such that we don't have to telegraph all our moves, right? And everything doesn't have to be a conversation in public. But I think it'll help the community if they know exactly, what are the steps that we take to drive decisions, right? So the community knows, for example, that, getting a return is one, and that the team, if they find opportunities to sort of reduce our risk and move capital, will happen and jump on that. Then, those expectations are set. And so ex post, if you report that, hey, we reduced our exposure by X amount, we recovered our capital, like the community says, oh, great, like, right, the opportunity came, but we knew that was one of the express goals, and we kind of rubber stamped it up front. So it just feels to me that, right, we kind of maybe need to start building a little more rigor around what are the drivers of success and what we're trying to gain. And, on the back end, it just kind of, right, it helps us delegate the authority to the team working on this, but also, lets the community kind of understand what are the various outcomes that could come out of it, and it'll help with reporting.
Yep. Let's see here. In order, I saw Wes hop up, then Priest, then Lapras. Wes, did you have something?
Yeah, I was going to kind of parrot what you were saying about the flexibility of locking all and then not locking some. And then as far as Aiken's points, which were good, like opportunity cost, I think, right, we just look at our revenue from the past, revenue from this that we already have, right? And then half of that would be our opportunity cost. And then as far as the opportunity, like the less influence that we would have with the revenue for partners. I was talking to Dietz the other day, and we haven't really had anything come to fruition from that. So those are my points there. I had some others that I forgot, but they'll come to me.
And I will actually just quickly clarify. One of the people that we spoke with was Badger when they were originally just taking CVX to stake natively on theirs. I don't know if they're still incentivizing that anymore, but that would be something to do with our CVX that's not locking it, but is still using it for partnerships or revenue as well. So, that would have to be revisited if that's still an option, or if other protocols are exploring that. But I jumped the line here. Priest, you're up next.
Thanks. Yeah, I just wanted to parrot some of the points made earlier. Just some back of the napkin math. I think at the current rates, we can afford to incentivize about $3 million of curve liquidity yearly with our current convex stake. So if we do cut that in half, I do believe it takes off the actual ability to move towards a gauge model. So it would actually be restricting our potential space of options we can choose from, because like 3 million is already a considerable amount, like 30% APUR, that would be about $10 million of liquidity. If we do cut that in half, that's about $5 million. So at that point, it definitely wouldn't be worth it anymore. So if we do cut it in half, I believe that going for a gauge ourselves and incentivizing isn't really feasible anymore. Just to like add that to the list.
Right.
Yeah,
I just in general, like I agree with that. Having a full locking everything is probably the better choice, just so that we have all our options still open.
Yeah, I wanted to jump in and kind of agree with that too. For me, it's kind of the signal that it sends to curve and convex. Like if we only lock half, it's like we're just kind of like pussyfooting around, and it doesn't kind of signal our intent. You know, it's not going to be easy to get a gauge, right? So anything we can do to put ourselves kind of in the best position and show we're aligned with those DAOs is going to be beneficial. And it sounds like one thing I'm taking away that I wanted to mention is like whether we lock half or lock all of it, it seems like, we want to assess curve as a potential option for the goals, right, of what we're talking about, incentivizing liquidity. So that kind of becomes a moot point if we don't get a gouge, right? So I think it seems like we're making the decision that we need to move ahead with trying to get a rewards gauge. And as we assess these other options for potentially incentivizing liquidity, which we should, and several people have kind of talked about that and emphasized that, it's important. Like the central thing is like, well, can we actually get the gauge? And if we can't, then that takes that option totally off the table. And then, we can, that's part of the assessment. So I think like it sounds like we need to make a plan to move ahead with that. And that's kind of the consensus we're getting at here. And then, based on what happens with that, and I mean, we can at the same time, right, be evaluating kind of other options too. But knowing, if we're going to get that gauge or not is the crux of, what we want to do with our CVX position. And, we won't really know until we try.
Yeah.
Awesome.
So in my opinion, the goal of incentivizing liquidity and the question of what to do with our CVX is pretty much those two things are detached. I don't think that, it would be great if someone could do the math on this, but I suspect that the best way for us to deepen Rook liquidity is not to fund a gauge either with our votes or with bribes. I think we would probably be better off either LPing directly from the treasury or using tokamak or using some sort of bond program. I think it's probably much more capital efficient for us to just continue to collect bribe revenue while we, analyze all the other options and what, do some cost benefit analysis, look at the opportunity costs, just like Aiken was saying. But I think we should it would be great if someone could do this math, but I think we should remove liquidity from that analysis. I highly doubt that, using our votes or using some combo of our votes and bribes is the best way for us to deepen Rook liquidity on chain. I think like Curve might not even be the best place for us to incentivize liquidity.
Okay. Hey, let's let Wappers hop in. I think he's got to head off in just a minute.
Yeah, I've got another meeting, so I appreciate you getting me on here. I just wanted to point out that you can, with some of the concerns that were brought up a couple minutes ago about like, what if CVX goes apeshit and we want to de-risk if it's like 5x or something like that? You can now hedge by shorting on, I think, FTX, which is obviously what Hog has used for a lot of, various treasury type stuff. So, if that happened and everybody was like, we should de-risk or get our initial out or anything like that, that's definitely a way to do that, to hedge before an unlock period. So that risk doesn't really exist anymore, as long as you have the loose capital to hedge. Cool. I got to go. Peace, everybody.
Hey, thanks for showing. Appreciate it. Shahar, and I apologize for interrupting you. I just wanted to let him say before he had to
No
hop.
problem. I was going to comment on what Peisho said. I mean, that makes sense. And like, if maybe we want to do that assessment real quick first before we go through the trouble of trying to go through curve governance and get a gauge. So if that's not going to be, so maybe like a preliminary kind of assessment of what are the options and like what are our top couple of options, perhaps, from a capital efficiency perspective. And maybe we should do that before we ape into curve governance gauge voting.
So what I would say that, my temperature check on this is that it sounds like the majority of folks here are in favor of the full relock, and we devise our strategy in the next 4 months and revisit, any of this, either if a decision's made ahead of time or we revisit this conversation again in 4 months. What I would like to see post, this town hall would be what I would call like a research kind of group put together on exploring the options around liquidity, per, available protocol that we could work with. So would love to see something on Curve, would love to see something on Tokamak, on Balancer, on Bancor V3, just Uniswap V3, whatever it is. I think that we need to kind of give the community the clearest picture on that. And that kind of probably needs to be started and probably needs to be a grant project. What would be where my head is at for those things. But, I'd like to see if anyone is dead set against relocking all of our position. If we think about community consensus, someone might not be maybe as happy as locking as, a partial lock. But, I want to make sure that anyone that has, a complete position against locking it all has said their piece, because I would think it sounds very much like, the whole group is ready to just relock.
Just for fun, you could just make an emoji poll in the voice chat, and then everyone can just say what they, or like vote on what they believe is the best course of action. That's in case they're sort of shy to speak or whatever, but they can still sort of voice their opinion on it.
Yeah, I think that's a fantastic idea, Peso. For me, I know that these are recorded, and folks that can't attend here go back and listen. And so I want to just give the opportunity for anyone that has that position or wants to support a position to say their piece. And yeah, then we can move to a poll or something else to get a lot more of a sentiment. So yeah, so that's just kind of where my head's at for this. All right. So yeah, does anyone else have any other comments or thoughts about what they want us to do ahead of the 30th with this CVX? Or if not, we can kind of close the book on this topic, and I think a poll might even be worked on right now. So we'll see how the rest of the community feels about that. But I kind of want to just give one last chance for anyone to say anything on this topic. All right. I can go on ahead and close out unless anyone wants to say any last kind of pieces on governance related topics. I am anticipating some votes going live very soon from some of the drafts that are out there. But hey, Ape Season, I see you raised your hand. Why don't you go on ahead and share your thoughts?
Yeah, just a quick question. I missed the beginning, so if this was already said, just tell me to shut the fuck up. But aren't we missing buybacks of the last two bribing rounds? Or
Yes. So we are currently missing buybacks of round 7. So that Frax is sitting in the treasury right now. That needs to be flipped. And then the bribe round 8 needs to still be claimed from the Vodium website by the multi-sig. So yes, that's correct that we are missing 2 rounds of Rook from that.
Okay, yeah. Just needed to make sure my bags will pump in the next few weeks.
I hear you.
I want to touch on something regarding the depreciation of the LP. Someone, one of the Sophins voiced, I think it was along the lines of, we should time our withdrawal of our tokens in conjunction with when we actually sort of stop emitting Rook, right? So we sort of the treasury absorbs the lion's share of the emitted Rook. So then we sort of take it out and then we sort of stop emissions altogether right after. And I'm just sort of asking if we could just like, do I need to edit the KIP for that? Or can we just time the vote so that when the vote closes, it sort of matches when emissions are over? Because I'm pretty confident that that sort of KIP is going to pass. So we could just sort of time the voting. So when the 3-day voting period ends, like there's like 12 hours or whatever of emissions left, and then we just withdraw it. Then.
So you want to take that?
Yeah, so we could do either that or just specify some end block in the KIP, which would be, I guess after the vote passes. I mean, the earlier the better, in my opinion. Maybe like there's some argument to be said for giving people in the pools,
one last like mild API or APR or something. I don't know. I was just I was just sort of wondering, what how big of a problem that is for the KIP. Basically, is what I was asking.
I think the KIP should just specify, some end block that emissions will be cut, and that can be relative to the passage of the KIP, or it can just be, fixed to like April 1st or whatever,
I'll just change it now, and I'll just say like withdraw when there's no, like, when emissions are sort of exhausted, withdraw 50%. Like I think that like I don't even think you need to put a block in there. Like it passes and then.
I just meant we need a block for when emissions will be cut.
Oh,
because we're no longer in the ACT system anymore.
Well, do we just not mint every 2 weeks?
No. So we did. Yeah. So that sort of 2-week setup ended with the end of Act 5. So for the last few weeks, we actually need to still retroactively mint rewards to those pools, and we've held off on that because this KIP seems pretty likely to pass. So it would be inefficient for us to do like a couple weeks worth of rewards in one mint and then like a few days worth of rewards in another smaller mint. So we're just going to do it all at once.
So Peso, my thought would be that if you put, the final block of rewards will be, I'm saying 7 days after the end of the snapshot vote. That will give folks sufficient time for us to communicate and warn them that rewards are done, for them to pull their funds and do something else. My concern was not giving people a heads up that this is ending, and all of a sudden, rewards stop immediately with the end of the vote, and we've given no heads up for folks to pull their funds out. And go ahead.
My question is not to sound insensitive, but like, should we care? Like, because like, to a certain extent, people are responsible for their own money, right? And they should be mindful of sort of what's going on if they're parking X amount of dollars in a KeeperDAO smart contract. Obviously, that's not the case. But is 1 week of emissions at like 3% APY that big a deal if we can just cut it off like 7 days early?
It's gonna be a difference of something like 100 Rook.
Yeah. Actually, you know what? Fair enough. Might as well, dodge the bitching in general chat or whatever.
Yeah, I think of it from a transparency perspective and honoring the process of governance where, if we plan to do that without giving heads up, that kind of, I understand that a lot of us believe that this should pass with flying colors, but I want to allow the governance process to work as intended,
Yeah, 100%.
So that would be my reason as to why we instead give a warning and enough time for people to pull their funds out.
Yeah, I agree. Okay, well, anyways, that's it. That's all I have. Can we have actually, you know what, Paisho, can you enlighten us on the Gamma KIP and the GMX KIP, and sort of what's the state of affairs for that, since you're a Sophin?
Yeah, from what I've seen, all the SOFONs are in support of the GMX KIP. There was like one question with the Gamma KIP about like engineering bandwidth in order to set that up and what the timeline would be. But yeah, that's basically the status of that. There should be an update pretty soon.
Okay, that's fantastic. That's all I have. I'm good. I'm chilling.
Well, then I would say we're going to go on ahead and wrap up this call today. I will say that looking ahead, we are coming near the end of KIP 12, which was, the quarter's worth of hiring for our CEO and CTO and the powers that came with that, as well as some reporting that comes along with that as well. So you'll be seeing some more communication and updates around that in the coming week or so. And, I will just say it looks like there's a poll posted in voice chat by Wes right now. 100% think that we should just relock everything. We'll do a bigger poll in the updates as well, and tag everybody. And it does seem like there's pretty clear community consensus from this call that we should just relock. So, I would like to see us take some initiative on researching, some of the opportunities that we needed to, that at least those conversations that arose as a part of this decision making in the call today and the workshop on Wednesday as well. And so, hopefully I'll be working with Taylor on that, on a way to put together a group or at least start thinking about how we're going to go about this kind of research project. But that all being said, this has been a super productive town hall. Appreciate everybody that came up, that shared their thoughts. Another big shout out to the folks that are in the CVX working group. Again, their ideas and thoughts have been fantastic, and it's been a great, I've had a great time, kind of helping run this project, and they're a big reason why. So, a big thank you to that group, and appreciate everybody coming today. Have a great rest of your Friday, starts your weekend, and see y'all soon.
Cheers, everyone. Thanks, Lion, for taking some notes.
See you guys.